Okay, so the stock market just reached a very dangerous inflection point. Normally, this would not represent a problem, but these are not normal times. The market is giving us many alarming signs, and in this video, we'll study the most important key points that we must watch from here. So let's calmly, patiently analyze what's going on and see what to expect next. We are going to study the S&P, the Nasdaq, the Dow Jones indices, and much more. My name is Nathan. Welcome to the Finance Hydra channel. First, the trend is clearly bearish on the S&P because it is still doing lower highs, lower lows. Right now, we are trying to do a reaction above the 21 EMA after doing a higher bottom level over here, higher than the previous bottom at 38.08. The last bottom was at 39.09. So, okay, we did a higher bottom level. However, we have yet to see a higher high. The S&P is still under this purple trend line over here, which is connecting the previous 1, 2, 3, 4, 5 top levels on the index. Therefore, the trend is still bearish. Could the S&P reverse? Yes, it could, and we are going to talk about that later, but right now, we have yet to see a meaningful bullish reaction. If we look the Nasdaq index, for instance, the Nasdaq index just hit a very strong resistance level at 12.7K, and right now we are dropping again, correcting to the next support level, which is this dual support level made by the 21 EMA and the support level, this purple line over here at 12.4K. That's a dual support level. Any bullish reaction in this area could be an opportunity to buy. However, so far, there is not a single meaningful bullish reaction on the Nasdaq index. In fact, it is just dropping after retesting a very strong resistance level over here. This black line at 12.7K was a top level over here on September 2022, again on February this year, and again on March this year. Therefore, this is our ceiling for tech stocks. Tech stocks are not going to fly unless if the Nasdaq index breaks this black line up here. This is our Everest. This is what tech stocks need to do in order to really fly again and seek higher levels. If this scenario actually materializes, I easily see the Nasdaq index filling this gap over here around 13.2K easily. Now, the Dow Jones index is looking quite curious, and it is looking, how can I say, incredibly technical, because we see a crystal clear key point at this black line over here, 32.5K. This black line did work as a support level 1, 2, 3, 4, 5 times. We saw the breakout of this support level, and right now it is working as a resistance level over here, 32.5K. What's more, this key point is working as a resistance level along with the 21 EMA, which is also working as a resistance level right now at this moment, and working as a dual resistance level over here. So, okay, we see this dual resistance level over here working as a ceiling for the Dow Jones. What's more, there is a possible bullish reversal chart pattern that I'm going to show you guys after I find the tool here, curve tool, which is a possible cup and handle chart pattern, right? I don't know if you guys can see it, but there is a possible cup and handle chart pattern over here. Either way, we gotta break 32.5K. That's the most important key point for the Dow Jones index. So see, the indices, SPY, the Dow Jones, Nasdaq index, they're all struggling to break their resistance levels. We see the 10-year yields finding their support levels inversely, right? We see the 10-year yields struggling at a very strong support level at 3.4%, and right now we are bouncing again to the 21 EMA. The fear index VIX was starting to engage in a bullish momentum, but honestly, This was just the volatility speaking. Look at these candles over here. The market is not easy at all right now. The market is struggling a lot in this situation. With the fear index looking like this, it is very complicated to establish with a certain degree of confidence the next scenario on the indices. But right now, all that I know is that the S&P is having a very hard time under a crystal clear resistance level, this purple trend line over here, along with the other indices. What could potentially save us from a bearish continuation? Oh, and before I forget, let's take a look at the SPY ETF. SPY actually did a golden cross pattern over here. The 50 period moving average crossed the 200 period moving average. This is a classic bullish reversal pattern, but right now it feels like we are trying to frustrate this pattern. It is very rare, but a fake golden cross could happen, right? We saw fake death crosses in the past here as well. Here was a fake golden cross, right? In 2015, we saw a fake golden cross. We did a lower high, lower low, and then we crashed it again, roughly 11% after the breakout. So yes, this still could be a fake golden cross. I don't remember who, but someone said, "Oh, Nathan, what's the point of a golden cross if it could be a fake breakout?" Well, in the realm of investing, there is no such thing as certainty. Nothing has 100% chances of working, absolutely nothing. Okay, so let's always keep an open mind in this scenario. Okay, so as far as I know, this could be a fake golden cross. If we actually find a top level under this purple trend line, under the 50 period moving average over here, then I believe the S&P could drop to lower levels. But before we talk about that, let's take a look at options over here. Options wise, the sentiment is not the best. On SPY, on options expiring on March 31, this Friday, the put call ratio is 2.5. It is quite high. This ratio decreases as time passes. In the following weeks, it is starting to get to lower levels, to 2 to 1.8. But right now, this week, the sentiment is not that good. In fact, it is quite horrible right now. We are quite bearish. We see such a high volume on puts over here, on open interest on puts. Right now, at this moment, the highest put open interest strike is at $380. This huge wall of puts over here. The volume is increasing on puts at 395, and it is increasing on calls at 400 as well, which might indicate that we could see potentially a reversal pattern. But right now, I think we should hold this idea because we're going to talk about that when we analyze the 1 hour chart. Right now, remember, my dear friends, for options, strategies, model portfolios, and much more, check my website. The link is in the description of this video. Check our premium analysis. Now, back to the S&P chart over here. If we take a look at the 1 hour chart, this is why there is still hope, right? This is why not all hope is lost right now at this moment. We see an ascending channel on the S&P index. Right now, we are back to the support level, to this lower purple trend line over here. And it seems we are trying to react. Indeed, we see a sort of bullish reaction right now. It is not an amazing, incredible bullish reaction, but we are trying to react at least. And this gives us some hope that yes, we might see some bullish continuation right now. However, we are not gonna see a true bullish reversal as long as we stay below the 4K. This blue line over here. This blue line is at 40.03, but still 4K. That's our most important key point to work with right now. If you're bullish, if you believe that the market is supposed to reverse, that's the key point. You are eager to see the S&P breaking 4K. If we break the 4K, we're gonna trigger a bullish pivot point in the 1 hour chart. And probably in this scenario, we are going to seek the higher purple trend line over here, maybe even the 4100 again. In this scenario, we would automatically break this purple trend line over here in the daily chart. This is why we could still see a potential bullish reversal. However, we gotta see the right patterns getting triggered. We gotta see a crystal clear bullish reaction on the S&P, and most important of all, we must see it breaking the 4K again. In this scenario, I believe, in my humble opinion as a retail trader, that okay, probably the Nasdaq was just doing a pullback to its support area over here. Probably the Dow Jones is actually going to trigger this cup and handle chart pattern, but right now there is absolutely nothing to do but wait for confirmation. Remember, my dear friends, real traders, pro traders, they wait for confirmation, while amateurs, they try to gamble, they try to predict. Real trading is reactive, it is not predictive. And of course, if you wanna trade with me, check my website. And if you're still watching this video and you are not my subscriber, come on, subscribe this channel because you liked this video. After all, you wouldn't be watching me so far, so come on, you liked the content, subscribe, click on the like button to support me. I really appreciate your audience, my dear friends. Stay safe, see you guys tomorrow.